So, Mark, the yen seems to be weakening, yields going higher. Some of that is what you would expect from a rate hike, but not all of it. What stands out to you from the BOJ?
I'm really surprised that the yen has continued to weaken here. And I say that in context that, as you know well, Anna, I'm a structural yen bear. I always think the yen's going to depreciate forever more. But I actually thought that this press conference, in context that Governor Ueda is always a very cautious individual, I don't know what people were expecting. He was never going to be more hawkish than this. Sure, he wasn't particularly hawkish, but I thought he was about as hawkish as he was ever going to be. So I kind of thought that after the original dollar-yen spike, the market wanted to sell yen. So the initial dollar-yen spike did not surprise me at all, but I thought we'd probably drift lower into the afternoon. Instead, we seem to be breaking higher out of the range. Now, there's a bit of a weird dynamic here that we're going into lower liquidity. As this starts going kind of higher, you actually get a binary situation where it's unlikely to stay around these levels. We would start triggering some stop losses if we could drift much higher from here. So at the moment, the price action's confusing me. I expected dollar-yen to drift lower into the afternoon, but there's a risk of some funny moves later on, given what's happened.
Mark, did the market overreact to that US CPI print yesterday? A lot of skepticism from economists, some calling it the Swiss cheese report. It was so holy. How much do you trust this drop in inflation?
Yeah, I mean, what's interesting is how quickly markets did this kind of dismiss it. So markets, the yields did not react much. I mean, you've seen this exceptionally soft print, and you'd expect people to price in more rate cuts. But in fact, the market barely moved in the yield side. Now, equities rebounded. They kind of they liked that, but they did, of course, pair that later on in the session. So, but stocks traders are always a bit more optimistic bunch, always more inclined to buy. This wasn't a bad news data print. Even if it wasn't, should be dismissed and not taken as a positive, you couldn't suddenly say this is a bad news, a reason to sell. And if you've got no reason to sell in stocks, then you buy. That's the default action. But certainly, bonds traders ignored it entirely.
Okay, I'm going to ask you a really dangerous question now, Mark. Are we done with 2025? Can we all take some time off and come back for 2026?
No, I think, unfortunately, and I said it's embarrassingly because I'm heading off on December 24th, so I'm leaving the problem to my team. But I think this is a market where the price action suggests that the technicals are a little bit fragile. The market is very bullishly positioned, and I think structurally, as we've discussed a lot, I expect stock markets to make fresh record highs in 2026 easily. I think it'll be a good first half of the year because of the structural tailwinds. But I think there are some problems there in terms of risk aversion side that have not played out. And again, I still draw attention to the fact that the digital asset treasury companies continue to trade weaker and weaker. That spreads into the crypto sector. That spreads into retail sentiment at a time they're getting squeezed by Christmas. And that kind of weighs on the favored AI names, the meme names, and that's why I think it's going to be problematic for another couple of weeks.